Hi, Shruti, how are you?
Very well. How are you, Priyashis?
Very good, very good. Pleasure meeting you again. And thank you for joining the show and thank you for giving us so much of time.
I'm really looking forward to it, and thank you for the opportunity.
No, really, it's been a pleasure. So, Shruti, before we delve upon your business models, I wanted to ask you a question. I was going through your profile and what you've done. One interesting fact popped up. You worked in PwC, you worked in Merrill Lynch, you were in investment banking, you left New York to come back to India. So, can you walk us through what prompted this change and what brought you back to India and what was your thought process then?
Yeah, happy to talk about it. So, I'm a typical Delhi girl, worked and studied in Delhi. Uh, College was here, school was here, and so was my articleship with PricewaterhouseCoopers. But Tushar and I, my co-founder, the main founder of the company, and my husband, we both had met in high school, and he was living in the US, and he did his graduation and post-graduation in the US. The option to be together was to be in the US. And, I'm a bit of a nerd, so decided to go study further and went for my master's to Columbia University. Now that I had done the Ivy League, I wanted to get the investment banking experience. So joined Merrill Lynch. After I realized that I'd got everything the US had to offer, we both decided to come back to India. And I think at that point in time, US was going through its own credit struggles, and coming to India
Hmm.
became a much easier decision. And India, I think, has been nothing less than fabulous for us in terms of growth and opportunity. And at that point in time, we had decided to start a family as well. The biggest concern I had was I would have been overrated or just a soccer mom driving kids from one class to another and coming to India. The decision was very, very easy for us at that point in time, and we're very happy about the decision.
Wow, great. Good to know. So for people who look at Akara, Stashfin from outside, how would you explain your business model and what you entail to do in India and how is it shaping up now?
So, when we moved back from the US, I had already worked here. So what I had was a credit history, and I already had an HSBC credit card, but I had a lot of trouble opening a bank account. I couldn't open my HDFC bank account because my name had changed. My name had changed in the US, and now my maiden name to my married name, it took forever to get a bank account opened. Similarly, Tushar had never worked in India, so he was new to credit. So he never got a credit card. Coming from the economic bracket we came from, we worried about what was happening to the belly of India, the 200 million households. And that's really how we decided to start Stashfin, with the hope that we provide democratic financial solutions to folks in India. So our product has evolved over a period of time. We had what we called a PPI card, which got discontinued in 2022, June 2022, followed by what we have today, what we call free credit period. What we saw a change happening, credit card penetration in the country is only 3%, while you have on an average 700 million UPI transactions. We saw that change happening in front of us. UPI becoming more mature, and taking steps to provide digital support to customers. You had eKYC, OKYC, PAN validation, and a lot of open APIs of the government were provided to NBFCs like us. So we decided to take that opportunity and provide a democratic solution to the customers, where for an for doing a transaction on our platform for a small convenience fee and not wanting to pay interest, you can actually foreclose the loan at any point in time. What we are seeing, the world is moving towards DIY. Whether you are whether you are Gen Z, Gen Y, it doesn't matter. No one wants to get a call. No one wants to get disturbed. And we are really moving towards that. And commitment, people still fear commitment, and especially the newer generation. Our customer target is anyone between the age of 27 to 35. And commitment is slightly difficult or they don't want to commit right away long term. So our product works very, very, as there's no interest if you pay within 30 days and there's no foreclosure fee. So you're not committed to life to a product. But this is aspirational India as well. And they want to build credit history. They want to provide convenience. All that works together with our product.
Brilliant. So tell us, I mean, through the years, I mean, if you look at the number of customers, how has that grown, and where would you like to be in the next, let's say, 3 years from now? How do you see yourself either changing in terms of the product itself, or do you want to get into some other segment too?
Sure. So, the journey's been quite rocky. I think since we started in 2016-17, we saw ILFS, we saw demonetization, introduction of GST. Then we saw RBI getting very active with unsecured lending, and a lot of changes have happened in the industry since then. But we've been pretty strong and steady in our growth. Where we were doing probably 4 lakh rupees dispersal per month. Today, we are crossing close to 500 to 700 crores per month. We plan to keep that growth intact and probably grow, but grow judiciously, profitably is really what we focus on as a company. Cumulatively, we've had close to 5 crore downloads on our app. And on an average monthly, we have 16 lakh customers coming, of which we approve close to 4 to 5% of the customers. So the balance 95% of the customers, we want to be be an app where they're provided best deals when it comes to best deals on their deposits, in the sense if they want to buy Akara bonds, if they get a 15% yield, we're very happy about it. If they get a lower yield, that's also all right. It's their decision. We want to be providing them deals on, credit vouchers. We want them to get deals on what we call BPS transactions. We want to be a platform where they can make any financial decision, whether they are HNIs or Belly of India or Gen Z. We want to be a democratic product for them.
So it's kind of a universal app catering to either transaction, lending, investments, everything, correct?
Everything, because we're licensed. That's the biggest difference. We can make the decisions on our own platform. We don't redirect the customers, and we really like that model.
Understood. So you talked about DIY, and so when you think about the customer, and you're talking about very, very different segments, the 25 to 27, and you talked about the HNI, is the behavior on when you look at the customer coming onto your platform in a DIY sense, is the journey different for them? How do you design the product journey and the client journeys? Is there an obsession to get this right? You talked about the downloads, and that's a very, very impressive number, 5 crores, right? So would you talk us through about how is that customer obsession part taken care at your end?
Yeah, so we're completely obsessed with our customers. We are a very lean team. We are just 221 people who have managed 5 crore downloads. And we continue to be lean while we launch that product, which we are talking about, BBPS, bonds, insurance. There's something else in the pipeline which we're looking to launch next quarter. So that being said, we are very obsessed, and all requires, you can't manage these 5 crore downloads or 16 lakh active customers till you're not obsessed with making sure you're communicating correctly, transparently, and honestly to the customers. So our entire platform is all built on that. You can reach us at any point in time through calling, through chatbot. Chatbot and chatting has become very, very popular. People love to use that, and we see 90% of our customers actually moving towards that. They want to be chatting simultaneously with us when they're at work. And our teams are very, very lean. Our customer support team is only 3 people, but they manage that kind of a volume. And I'm very proud to say that month on month, we track how many customer inquiries and customer complaints we are getting, and we work on fixing that at every point in time.
Really? So for the future, and when I asked you this question couple of minutes back. So, are you introducing any new products on the lending side? So, for example, are you looking at secured lending? Are you looking at new areas where you could probably position Stashfin as an organization?
So anything that can digitally support our ecosystem, we will introduce. We are looking at a couple of products which can be digitally managed, but I think it's a little early to talk about, but there's going to be more on the secured side. So yes, we are looking at products which go with our ecosystem, those go with our ethos of everything being digital and not disturbing the customer, and DIY model. We are absolutely looking at it, and I think in the next quarter you should see a lot more changes. This quarter we had bonds. We were the first ones to introduce a 10,000 rupee bond in the industry, in the fintech industry. We definitely want to be innovators. We definitely want to break the stereotype that you're just an NBFC. So we will continuously introduce new products to introduce interaction and integration with our customers.
Understood. So, for the customer who's buying a bond of Stashfin, uh, how does he then, let's say, understand Stashfin as a model? So, what kind of values does he look at Stashfin? You talked about innovativeness being one. You talked about your obsession about customers. Can we talk about a little bit on the financials and how you see your ROA tree and your PAT moving in the coming years?
Yeah, sure. So we've always been profitable as a company. I think the last 3 years, just to give a background about the company, we've always been funded. We started the company with funding, and we've been very fortunate that our investors have participated in all A, B, and C rounds, and we do not have the pressure what we hear some of the market players do have. So cumulatively, the promoters and the management and the employees own close to 50% of the company. So we do not have those kind of pressures. So what we do, we make the right decisions for the company, really. That being said, we introduced EY as auditors as we geared to getting better corporate governance. And EY hasn't just come at the NBFC level, it has come at the group level. So they audit all the group entities of the company as well. And when we look at growth, we look at growth both in providing cross-sell options to our customer. Of course, growing the loan book is very, very important for us. As I mentioned, we're doing 500 to 700 crores. We want to continue to grow that as we do have a lot of customers coming in. And I think we're looking to close the year almost 40 to 60% higher than where we were last year in terms of AUM size, and we want to keep that momentum up. We had been profitable last year. The ROAs had been close to 5%. We want to continue to be at that range, and I think even with the rates coming down and the rates we're charging the customer, that has moved us towards from focusing a lot on the product, getting good customers, financially sound customers to our platform, and providing them convenience as what the mantra has been, rather than just underwriting customers for small ticket size loans at a higher yield. So as we move towards moving to financially sound and people who understand their finances, we'll have to provide a lot more product profitability to them.
Makes sense. Love that skin in the game when you talked about the fact that 50% of the company is actually owned between the promoters and the employees. That's outstanding. Can I ask you? So, when you look at your liability, your sources of liability, and how do you see that evolving in the coming future? So, how much of liability sourcing is from banks, NBFCs? Now the bonds have also come in. So, would you like to throw some light on that?
Yeah, sure. So cumulatively, the company's raised 8,000 crores in capital in different formats, whether it's bank, NBFCs, co-lending, NCDs, credit funds. We've been doing that now since, raw material, capital is raw material for an NBFC, which you understand. We have all the same approaches. As we're looking to grow, things can go up and down. And what we understand with Basel III coming in, banks may step away from doing unsecured lending. That means we will have to have more credit funds involved, which is the model worldwide where credit funds participate in unsecured lending. We are looking to grow that part of the book, and retail's always been a very big focus for us. As I said, innovation and retail is how we are customer obsessed, and those two will be very, very important for us as we are looking at levers of growth. Bank, of course, provides credibility, and partners like you provide us assurance and keep us in check. So we're looking to grow all of them together.
Super. Thank you, Shruti. So let me ask you a question from let's say somebody who's also listing their entities on other platforms. So, and you know that Altifi is also a OBPP. So, and you've been talking about the 10,000 rupees, face value bond, which you listed for the first time in the fintech space. So, how have the regulations changed? One, and two, what do you think can be done more to get more participation across retail? Of course, when we go retail, one of the things is that how do we make them more knowledgeable? How do they know more about the organization, about the instrument that they're investing? So, what can the ecosystem do at large to help a retail investor come and invest? And of course, how can the ecosystem also educate the retail investor? Would you like to share your thoughts?
Yeah, absolutely. I think RBI and SEBI are doing a great job keeping, NBFCs being the largest provider of corporate bonds in the industry, and keeping them in check, and actually including expanding the funnels become very, very important. And that's how 10,000 came about. But I think the customer education is definitely requires a lot more effort. I think people do not, none of the OPBB platforms actually talk about what rating means. Triple A would mean that much, and who are the players in the triple A sector versus folks who are in the triple B and who are unrated. I think that kind of education, the transparency, because my risk appetite may be different from a risk appetite from a colleague of mine, but we probably want to take that. All that discussion, that education is actually missing, and I think SEBI can do a lot more. The other challenges, is of course the KYC. It is two levels of KYC that happens. One on the OBBB platform, one on the issuer side. A lot of dependence on the trustee to upload the data correctly. We generally find that when POS data does not get uploaded within the same day, and that's something we've highlighted to NSDL as well, that these changes should be made, and it should be tradable. It shouldn't be a discovery when you reach out to the OPBB platform, right? How you want to buy a share today. There should be someone you should be able to buy an Akara bond on an exchange, because that's transparency, and you have your clearing price as well available there. Clearing price, clearing yield based on your appetite. I think there's a lot more that can happen. The OPBB market has grown tenfold, but it's still not where it should be. And there's enough people still talk about stock exchange and talk about securities, shares, but the conversation of bonds is very, very limited. And I think one thing people don't understand very well, that you can actually choose to be getting the same return without actually putting your principal at risk. So choose your product wisely, whether it was amortizing, is it bullet, do you have the appetite to make your decisions on monthly basis or quarterly basis where to reinvest to get the yields you're solving for, or you just want to lock in for a longer period in time. I think these conversations are kind of missing, and now I'm reading a lot more articles on Mint and ET about OBBB platforms, but I think there's a long way to go.
I agree with you, and I completely endorse all the points that you said. I think standardization, transparency, and liquidity, like you pointed out, are keys to unlock retail value in India. And we believe in that strongly. And I think you hit the nail on the head when you said that. And for us, that is very important, that the retail investor should know what is investing into, especially various ratings, etc., etc. We'll talk about it more. So tell me, I mean, if we were to look at Viksit Bharat and Stashfin, and then we spoke about the growth that you're anticipating. So how do you see yourself, in the digital lending economy of RBI, and what kind of other should I say, hurdles do you foresee, and how will you overcome those hurdles, if there are any that you see in the current regime, or what can change in a regulatory standpoint? You talk about double KYC, dual KYC, all of that. Is there anything else that you think which is impeding a retail investor, and of course, somebody who's taking a loan from you, and what could be done?
I think on the loan side, RBI has been extremely active
Hmm.
and extremely putting policies in place about transparency and communication. I think a lot, and with the new law on DPDP Act coming about, your WhatsApp also be SIM bound. I think those will become very, very important when it comes to fraud. I think the fraud engine, maybe there's supposed to be more communication, more whitelisting of phone numbers from where you can receive calls, the OTPs where you can receive from. Uh, you know, I think on the fraud side, we need a little more help from RBI to communicate to the customers. Customers know that they don't need to share their OTP with someone, but
Correct.
sometimes you know you just do that, and that's when it hurts the customer. Of course, the other thing is social media, control of social media, people putting videos about the company where they don't have trademark rights. I think
Hmm.
RBI, SEBI needs to regulate that a little bit, because what we see, naive customers actually put their phone numbers, and when they put their phone numbers, they become targets of fraud even more. Even though you may
Correct.
not share their information, I think rules about trademark usage should get a little more stronger, especially on social media. I think these two things can really protect the Indian consumer more than the company. It's the Indian consumer that has to be protected and educated.
Understand. In your model of lending, and you talked about your underwriting models, and you talked about the fact that you have a product which acts like an OD. Uh, do you now use AI or machine learning to underwrite better, to score better? Do you have any scoring models that you've developed indigenously, or something that you're working on? Would you like to share some insights coming
Yeah,
from
sure.
you?
So we have couple of proprietary models. One is the heuristic models, which actually just checks whether the person you're claiming to be, are you the same person or not. So for example, if Shruti says that she is a customer who earns close to 50,000 rupees a month, but she's using a handset which is 10,000 rupees, it is an early indicator that it could be a burner phone, what we call a
Hmm.
phone used for uh, a phone used to just apply for loans. Certain things, the heuristic models also checks, are you copying and pasting your uh, date of birth or PAN number? Everyone knows their PAN number and date of birth by heart. If you're copying and pasting, you've probably created an Excel or database of KYC fraud. So those kind of heuristic models run. These are just some of the examples. Then we rely on bureau data points. We collect close more than 2,000 bureau data points from the bureau report as well, to understand the customer's ability to pay and the
Hmm.
amount the customer has the ability to pay, and we underwrite the customer accordingly. One of the mantras of the company is never be the largest lender to the customer, as we are an aspirational product. We are not an HDFC, we're not an ICICI. We charge slightly higher than what you would get for the convenience in the product, as we are more product centric, we're more product centric app versus a typical financial provider. So when we collect a lot of information to understand what's the right customer for us and the right amount for that customer. It's completely risk based. It's completely on the ability of the customer and the data we've been collecting. That's to onboard new customers. Even for repeat customers, you may be approved once by us, but disapproved the second time because of the data we've collected and the information we have on you, information on your repayment behavior. We decide these models work or not work, and we may have a cool off period for you. So there are a number of models which we've developed and are continue to develop, as the idea is to reduce risk and reduce pricing for our customers as well.
Lovely. Speak, for the viewers on Altifi, and for for Altifi itself. I don't know whether you've seen our app or our website. You talked about the importance of investor education. Is there anything that you would like to tell us about Altifi and about Northern Arc?
So Northern Arc's been a big supporter. We've known them as IFMR. They came in 2017 when we got our license, NBFC license, and has been the first lender to us. And the management at Northern Arc has been extremely supportive throughout our journey. And we look forward to working with them in a larger way and be one of the best sellers for them on Altify platform.
Thank you so much. Do you have any questions? I've been asking all the questions. If you want to ask me anything, I'm more than happy to answer.
So tell me, what's your typical customer base for the NCDs?
Yeah, okay. So quite like you, we actually have a very wide investor base. So we see two investor behaviors, two kind of investor behaviors. One who come and buy a product, typically the first time buyer, who probably looking for returns. And we have also a nuanced suave investor who comes and buys because they believe in the quality of product that Altifi hosts. And typically our ticket sizes are quite large, even online, DIY. We are a complete DIY platform. So our ticket sizes are at least 4 times that of the market average. But these are the two buying segments. But one of the things that we do, and I've made some mental notes as well as you were speaking. But one we consciously did that while we are a digital platform. We said, bonds are still not well known. They are nuanced. Or people need to get more education. So we run a full suitability on an investor before we allow them to invest on our platform. So we ask a set of simple questions, and we therefore showcase the bonds according to the risk appetite, something that you spoke about, right? We do that. We tell them that, look, based on our research, our analytics, we believe that these are the 5 bonds that you should buy. So we do that check.
Okay.
Incidentally, and we did that because we thought trust is par for course in the business that we are in, because its investments is money at the end of the finance of the individual hard-earned money. So we thought that it is important for us to do this so that the investor knows everything about a bond before he or she buys. Most importantly, we disclose everything. I mean, on our website, we do all kinds of, we showcase everything from financials to the IM to everything, including who are the lenders on that name. We have to do a lot more, and I take your point as an investor as well as somebody who was in the ecosystem, that we have to do a lot more to educate investors. But we are trying our best, and every day we think about how to make the customer journey more easy, how to make it more transparent, how do I make our systems more standardized, and how do you ensure that there is enough liquidity. So that's our goal, and we want to be the number one player in the market, not because of the volume that we do, but by the trust that we earn.
Yeah, that was my next question. What's your vision? So you answered that pretty well. So if someone had to choose between you and another OPP platform, what would be your key distinguish features? As you mentioned, product obsessed.
We are product obsessed. We are journey obsessed.
Journey obsessed.
So our product filtering goes through 2 levels of filtering today. We are trying to introduce a third, independent filtering. So that's on the product side. So everything that we bring to the platform, we want to be sure of what we bring to the platform and what does it mean for the retail investor. So that's what we do, and that's only on NCDs. By the way, we've also expanded, and we realized that customers come back and do want to invest in other asset classes. So we've got now mutual funds and FDs. And again, it's completely digital, completely transparent. We have ratings from, let's say, uh, external rating agencies for mutual funds as well, and not one but two, three ratings, and we then take them through the entire journey of buying fully digital. So yes, we are obsessed with the journey, we are obsessed with the product. But I think what will differentiate us with the others is that we keep on thinking what next and plan ahead. I think the fact that we are doing a suitability on bonds is much beyond our time. The fact that we are introducing a third layer of filtering uh, name is much beyond our time. What we've also started doing is that we believe that, I come from a wealth management background. So, frankly and honestly, in a webinar, we never did bonds earlier because it was so opaque. It was very difficult to fulfill. Customers did not know what they were buying, etc., etc. But thankfully, because of the regulations, the regulators, the transparencies that have come in, a lot of that has become easier. But I think that we have to make bonds up. If you go to a mutual fund platform, you get a benchmark, right? And then you perform and you see, and you were talking about it, right? And you said, okay, what is my performance against that benchmark, right? In bonds, you don't. But I'm happy to tell you that we have our own benchmark now, and we will publish it, which is approved by a rating agency, and which will therefore compare your return to a benchmark, which is blended across, let's say, AA, AAA, A. So at least this is what the benchmark is, because there's no composite index for having all the rating curves incorporated. So that's something new that we are bringing in. And we are always innovating, quite like you. We're always thinking, what's the next thing to do to keep the investor in the center of the plate of whatever we do.
This sounds absolutely great. And I actually want to ask you a question about collaboration. Where do you think we can collaborate as a issuer of the bond and a platform of the bond? Where is your vision? Where do you think issuers and platforms can educate the customer or grow this even more?
I think to answer your question, first thing is that when a bond transaction happens, and this is something that we've changed already in our organization, we've piloted it. So when a bond transaction happens, it happens, and then it's just the monthly interest or principal coming through, depending on the structure that we have of amortization. But consciously, I don't think any of the players send an update, right? If you bought something from a mutual fund or an AIF or a PMS, you get a monthly statement. You know where your funds are. You know what's it doing. So what we've consciously started doing, and this I think nobody does, which is an edge, is that we send a monthly fact sheet now. It's a fact sheet on the company, what has happened in the last quarter, uh, key financials, changes in KMP, etc., in a single pager, which tells the investor, look, this is where what you bought maybe 2 years back, but this is where what the company is now, because it's an individual company. And I think our investors have given a big thumbs up. So we tested it. I think now it's time to scale.
Lovely. Sounds very exciting. And in terms of Altify, being part of a big ecosystem like Northern Arc, what is the culture like? And how big is your team? What's the culture like at Altify?
Well, we are a very nimble team. We were about 5 people in year back, but now we are a team of about roughly 50 odd people, but largely tech and data driven. So we are large on tech and data because that's where we think all the time. So we are data tech led and customer obsessed. So it's largely tech and data driven and product. And again, for me, product is also tech because whatever we deliver is digital. We are digitally available everywhere, and we have customers from all corners of India. So that gives us a kind of a little bit of confidence, saying that we can grow this. And if you see, and you talked about it, I mean, today corporate bond issuance is about 11.5 lakh crores. That's roughly 3.5% of GDP. And if I look at the overall credit requirement of India Inc., that's about 115 to 125 lakh crores. Now, if you have to grow India to the 5 trillion and beyond, you need a lot more participation in this space. And of course, we want to work closely with regulators, with market participants such as you, the entire ecosystem, to ensure that we grow this market. And that's where I think the Northern Arc ethos comes into play. We are a fully independent subsidiary licensed by SEBI, but the ethos of Northern Arc, where we put trust, customer, above everything else that we do, comes in very, very, very significantly, high to us, and that's what matters to us at the end of the day. We everything that we do is based on the trust and the customer.
Lovely. And if you had to bust a couple of myths about fixed income and NCDs and bonds, just generally fixed income market, what would those myths be that you would like to educate the customer about?
One myth would be, yeah, I mean, when I tell people, I was talking to a customer today, and I said, look, you could still invest and get, returns which are higher than fixed deposits, and you also can get a better return over a period of time. I think that's one myth still exists because people don't realize that bonds can give you delivery. One of the other myths is that you can balance your portfolio. I was talking to Financial Express. I mean, if you look at the growth in fixed deposits vis-a-vis the growth in equity or bonds or fixed income space, I think that's one of the things that we have to do a lot more, because bonds is only 1% in the household compared to, let's say, equity of 6.5. So there are many myths to bust, actually. If you ask me, bonds are hardly there, or fixed income as a solution is hardly there. But I think that's the way. One of the things I also spoke about is that we should have something like a debt-linked savings plan, right? Like ELSS, you should have a DLSS as well. And we spoke about it, saying that how can you make that appeal to everyone, like ELSS.
How do you get the regulator to approve it? It's a bigger question.
I think in my conversation with all the regulators, the regulators have been very, very, should I say, very encouraging about the fact that, there should be investor education in every district in India. And I'm talking about SEBI and RBI both, because I happen to meet both. They're very, very keen that, everybody should invest by knowing. That's the key. I think that's what supersedes what we also want to do. The investor education is key, and we spoke about it. And we are trying to figure out how do we educate the customer at large. Although we have significant amount of website visits every month, but we want to grow that side of the business so that we educate customers to make the right choices by knowing the right level of risk and therefore return. So it's not going to be an easy task, but the early, should I say, signs have been very, very encouraging.
Oh, it's definitely
very
food for
bullish.
thought. It's great because you get capital back, you get interest, so it's definitely food for thought. So liquidity has been another challenge in debt markets. How does
Right.
any views you have on how some of these can be answered to provide more comfort to make NCDs a more tradable security?
Yeah.
How do you?
So
Yeah.
so I think the regulators are also talking about it. I think my thesis is that it should, whether it is the Ministry of Finance, whether it is RBI, whether it is SEBI, they're all thinking about how do I get liquidity beyond a double A and below, because they are not easily reparable, some of these securities, and of course then it's not therefore tradable to the extent it should be. So as an OBBP, we are also kind of meeting and raising this concern with all the market participants. It's going to take some time, but I think the institutional interest in some of these papers will underline or will help us get the retail liquidity. If you have to get the institutions to participate in A-rated papers, so that there is a retail rub-off as well. But today that is limited to AAA, whether you look at RDA, PFRDA, or other institutions like mutual funds as well. They're not investing so much in these securities. I think as soon as that starts happening with repoable facility, I think some of these things will get taken care of. But I think we are at the cusp of a growth period, which is why we have to be very, very responsible about the retail investor, because this can easily be the next mutual fund story. If we are talking about mutual funds hitting 1,50,000 crores, bonds or NCDs or fixed income solutions can easily hit 70 lakh crores of where mutual funds are today. Because if you look at all developed markets, they are in that range. Because if you look at US or China or even Korea, their corporate bond to GDP ratios are 5 times, 10 times, much, much higher than us. In fact, US is no comparison because it's 110%. So I think, but it is the responsibility of market participants such as us to go responsibly and make sure that we do the right things and there are no missteps, so to say. So, and there are no catastrophic events.
And one last question. If there was one barrier you wanted to remove for the investors of NCD holders, what would that be?
Oh, I've been talking about that. I mean, you said it, because multiple KYCs. So when you look at the KYC journey itself, it has some, some handoffs, etc. I think the regulators are working towards bringing a single KYC journey for both domestic customers and NRIs. I was very glad to know, and I must tell you also, Shruti, that pleasantly surprised that the Gift City has actually introduced video KYC for NRIs, which was not there at all. So I think the regulators are taking progressive steps. They also realize that this is one area where we can improve and, of course, keep the controls as well. I think that would be a game changer. Whether it's something like a digital card that you carry and you kind of give it as a KYC across the regulators. I think that could be a game changer. Because if you're RBI KYC, why do I have to do SEBI KYC or vice versa? I think the regulators are working on that. There is a lot of work happening.
One thing I don't understand, if you have a demat account, why do you have to do KYC again? You open the demat account with KYC. It should be a straight through journey, but yeah, there's lots of hurdles in the way of actually getting an NCD in your name. I've noticed that.
Yes, but I also believe that there are a lot of positive steps that have been taken by the regulators. If you see from, especially SEBI, from November 2022 to today, there have been a lot of progressive steps which have been taken. I mean, the birth of OBPP is from November 2022, when the circular was given, to today has seen many changes. And I think those changes are coming. The winds of change are already there, they're coming. And I guess there will be enough and more coming up in the future.
Yeah, look forward to it.
Shruti, thank you so much for your time. And it was lovely talking to you. All the very best. And thank you for being on our show. Really look forward to catching up again, maybe in the near future, and talking about all the new stuff that you are bringing to the table. So all the very best for the future as well.